All right, so imagine this. You found your dream home. You're super excited to move your family into your dream home, and a loan officer tells you it's going to cost you $20,000 to buy this place. Then a week later, you get some documentation and it's an extra $5,000. So now it's costing you $25,000. And then once you get right up to closing, 3 days before closing, it's costing you $30,000 to buy this home. And you're sitting there thinking to yourself, where did all of these costs come from? Did I even do my homework right when I was shopping around for a mortgage? And here's the thing, it's not totally your fault. There are two specific tricks that loan officers out there use to cause exactly this situation. And me personally, I've actually lost clients because of these two tricks that loan officers pull across the country. So in today's video, we're gonna find out exactly what these two tricks are, how to spot them, and then the right questions to ask so that this never happens to you. Welcome to the Jimmy Knows Loans channel, and let's go. When you first go to buy a home and you're shopping around for a mortgage, you're actually doing the right thing. You're comparing different lenders, comparing their costs, comparing their rates. You're comparing on if you think they're a good fit to work with you or not, personality-wise, education-wise. See, the problem with that is loan officers out there know that you're shopping, and instead of trying to compete fairly, they'll show you, the client, an incomplete picture, which then makes their cost look lower than the actual cost to close on that home is. I had someone reach out to me not too long ago. They had watched one of my videos and then contacted another lender. And they came back to me and said, hey, Jimmy, this other lender just sent me an email with a letter and a rate, and that was it. There was no breakdown, there was no payment breakdown or closing cost breakdown. It was just the rate, the letter, and said, let me know and reach out when you find a home. This person who came to me asked me, is this normal, Jimmy? And my response was a resounding no, and that's completely wrong to do. Because here's the truth about that situation. If all you have is a rate, you cannot make an informed decision about your mortgage, period. And that gap of information can cost you, the home buyer, thousands, if not tens of thousands of dollars when you're trying to purchase a new home. So for that reason, let's get into the two tricks loan officers try to pull out there when it comes to presenting your mortgage to you. So when a loan officer gives you a quote, they're going to show you the cost to buy that home. They should show you the cost to buy that home. That should include your down payment, your closing costs, your total monthly principal and interest payment, including taxes and insurance or mortgage insurance if it's applicable. You as the buyer should be seeing the whole picture. But here's where it gets sneaky in the lending world. See, lenders only directly control one category of the closing costs, and that's in Section A. It's the origination charges. It includes things like processing and underwriting fees, administration fees, or fees or points that you're using to purchase or buy down a lower interest rate. So where you're gonna find these fees are in Section A of your loan estimate, and it's on page 2 of the loan estimate. And once you are disclosed a locked loan estimate from your lender, and you look in Section A, and those charges are there, they are legally required to honor those fees. They cannot go up. But here's the problem. A loan estimate is a legal regulated document by the CFPB. A rate quote, which is what most people get at pre-approval stage, is not. Those rate quotes that you're getting, they aren't binding. So a loan officer can quote you whatever they want at pre-approval, and they aren't legally obligated to honor it once it gets to closing. So what do some loan officers do out there is they will quote you just the Section A fees, which is a sliver of the total cost that it's going to take to acquire a home. And then they'll just leave out everything else. The appraisal fee, the title fees, the taxes and insurance that you might have to pay, the recording fees depending on the specific state that you're living in. Maybe there's transfer taxes depending on the state and the county that you're living in. All things that you will have to eventually pay at closing that they're not disclosing because they aren't the lender fees. So just because the lenders don't technically charge those fees, some loan officers, they just don't mention them. I've seen lenders market some crazy things like $499 in total closing costs, and then people freak out because they think they're getting the deal of the century. And then those same clients come and sit down with me, and we go through the full picture. And we go over, these are what the title fees are going to be. This is what your appraisal cost is going to be. This is how much you're going to need to put in your escrow account for taxes. And then when clients realize the full picture, the full total cost to acquire a home, they realize like, this is several $1,000s off of what I was expecting by this advertisement from this other lender. The other lender didn't lie about the $499 closing cost to work with them, but they damn sure didn't tell the full truth. And then when the full closing costs come up at closing, they have the nerve to say, well, you should have known how closing costs work. That's not on you, that's on them. Now let's talk about another way you can get tricked by lenders out there, and that's how they artificially lower what your monthly mortgage payment's gonna be. Your true monthly payment on a home is gonna include principal, interest, taxes, insurance, mortgage insurance, and homeowners association dues if the property that you're buying lives in a homeowners association. Now, all of those numbers need to be in your monthly payment mortgage quote, because all of those dollar amounts are going to be coming out of your pocket each and every month if you end up purchasing the property. Lenders out there, especially the ones who aren't real familiar with your local market, will quote you on principal and interest payments only, leaving taxes and insurance completely out of the equation. So let's say you find a home and they tell you, hey, your monthly payment is $1,000 a month. You're excited and that's what you budget around. But then you get to the closing table and you realize that, hey, that was only my principal and interest payment. I need an extra $700 a month to put away for taxes and insurance. That's not a small discrepancy, and that extra $700 that you weren't budgeting for can genuinely affect if you can afford the home or not, and genuinely affect if you can afford the home, your lifestyle that you were planning to live in that home. Oh, and it gets worse. Some lenders who aren't familiar with your local market will grossly underestimate what the property taxes are for the area that you're looking. So taxes on a home in Chicago or the Chicago suburbs run you anywhere around $6,000 to $9,000 per year. If a lender quotes you $2,000 a year for property taxes because they didn't bother to look it up, that's an extra $500 a month into your escrow account out of your pocket that you were not expecting. And let me fill you in on a little secret. The county that you're purchasing your home in does not care what your lender quoted you. You're going to pay the actual taxes regardless. So now that we know the tricks that loan officers pull out there to make them look cheaper than other loan officers, let's figure out how you can protect yourself when you're shopping around for mortgage lenders. First and foremost, never compare lenders based on what their total closing costs are. Only compare them based on their Section 8 costs, because that's truly what the lender is charging you to work with them when it comes to obtaining a mortgage. And realistically, that's going to be the only number different between lenders. Taxes, title, recording fees, those are going to be the same no matter what lender you go with for your next purchase. Section A changes from lender to lender. So ask your lender, what are your Section A origination charges? That is your apples to apples comparison. Secondly, I want you to verify your monthly payment yourself. Don't just take the lender's word for it. For the property taxes, you can go up on the county assessor's website and take a look at what those are per year. And for the insurance side of things, get your own homeowner's insurance quote. Add those all up independently and just do a comparison of what your lender is quoting you. If it's off or different, just ask the question. And third, and very importantly, demand a full breakdown in writing. I'm not talking about an email with just an interest rate. I'm talking about Section 8 costs, estimated appraisal fees, estimated title fees, what it's going to take to fund your escrow account if you have one. Demand a full breakdown in writing, itemized out. And also demand a full monthly payment breakdown. You want to see principal, interest, taxes, insurance, anything that's applicable to your loan. You want to get the full picture in writing. And if a loan officer is not willing to provide that, then that's your answer right there. All right, let's get into some 3 key insights. Insight number 1, a loan quote is not a loan estimate. A quote has no legal weight and a loan estimate does, so do not make a major financial decision based on a quote, especially one that's delivered via email with just a rate on it. Please push for a full written breakdown before you commit to anything. Insight number 2, Section A is the main differentiator between lender to lender when it comes to costs. Everything else, title, transfer taxes, government recording fees, insurance, is going to be pretty much the same when you're comparing lenders. So when you are comparing lenders, compare Section A. Don't let inflated or deflated third-party costs cloud your decision. And insight number 3, not every loan officer is out there trying to trick you. Most loan officers are not, but regardless, you need to know how to protect yourself. Just ask the right questions, request the full breakdown, verify the monthly payment on your own. The lenders who are acting in your best interests will show you everything without question. And the ones who push back or stall on full disclosure tells you everything you need to know. I truly, in my heart of hearts, want people to make the most informed decision on probably what is going to be the biggest purchase of their life. So, if you've ever felt like a lender is trying to trick you, or you get an email that with just a rate on it from a lender without any full breakdown, hit me up, drop it in the comments below. Hit that subscribe button. This is why this channel exists. I'm trying to get all of this information out there for people so that they feel informed and feel protected. If you've made it this far in the video, I super appreciate it. Thank you for the love and support. Hit that subscribe button, reach out to me if you have any questions, and we'll see you next week on the channel.